Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. The consumer is everything to the economy, and you see right now these huge signals that are appearing, highlighting specifically that we are in crisis mode. You want to know? Let's begin right here. Europe is on high alert as Russia temporarily halts gas flows via major pipeline. We're talking about Nord Stream. Now, the Nord Stream 2 was a huge issue a few months ago before the war started, and you saw Germany said, no, we're not going to let this happen. And what is going on? Of course, you've got the tit for tat, you've got the back and forth. They're saber rattling, they're having problems between each other, and it's the West versus Russia. You look at Germany versus Russia. I mean, there's all these different little things that have happened over the last while. I mean, each individual country, and then of course you've got the different factions against each other. It's incredible to see it all. But right now, apparently there's supposed to be scheduled maintenance that is 10 days in length. And that right there is, maintenance on any infrastructure. You're going to need maintenance. The expectation though, the worry though, is that they will go beyond the 10 days. And if that's the case, there's going to be major problems. Already 10 days of no gas or less gas is a problem because you see the actual total amount that they have and the prices that they're paying right now. This is an issue. And the consumer, whether it is in Europe or in the United States, is so important right now more than ever before. As things start to naturally slow down, we need every reason to keep things moving. So this isn't a good sign, to say the least, but we will, have to keep updates on this. In this case here, Gazprom curtails gas flows to Italy by 1/3 in a further cut. So this is yet another example. So they talk about the maintenance and so on. Gazprom announced that it will supply ENI with approximately 21 million cubic meters of natural gas per day. That was 32 million. Okay, the 1/3 cut will further reduce gas supply and has already been curtailed by as much as half since mid-June. And as they talk about here, winter is a big issue because the stockpiles need to come up. And if not, then during the winter, you've got a serious issue. Further below in here, they also say, I believe it was the governor of the central bank said, if we get, further curtailment right here, if Moscow were to halt deliveries altogether, Italy would face a recession. So that's important to know. Okay, and where is all this gas going to come from if they say, oh no, Russia, we don't want to deal with you anymore? Anyway, this is just showing us the potential for what could happen. So this was back in the third quarter of 2020. All I'm trying to highlight here is power and gas bills in euro per year for Italy, okay? So it shows us essentially, all you need to know is the percentages from where it was to where and let's say where it is now, okay? A big jump. However, if we go from the third quarter 2020 to where they expect it to be, should this be cut off, it would be a 290% increase. From today's prices to that cutoff, if there is a cutoff, it would increase by another 65%. So this would be detrimental to Italy, and the same situation goes for any other country in Europe. And right now, people in the United States, their gas, in some cases, is being sent overseas to Europe to assist with Europe. But the people of the United States have their own to deal with. So everybody seems to be losing in this situation. This article here from Oil Price is talking about oil. Okay, no wonder that Goldman Sachs is saying that oil could yet hit $140 a barrel, even with the perception of recession coming on. And by many metrics, recession is already here. I will show you that data in just a second. $140 is still our base case because unlike equity, unlike stocks, which are anticipatory assets, commodities need to solve for today's mismatched supply and demand. That's interesting. We will see. Okay, because there's no possible way that we could deny what happened in the previous cycle. Yes, we did have subprime and everything going wild, and then you saw the price of oil from $147 a barrel get smashed down during that recession. But nobody knows. Is this going to be more like 1970s? Is it 2008, 2000? Is it a bunch of all of them? That remains to be seen. But I do think that the price of oil went too high, too fast. And whenever that happens, doesn't matter if it's oil, if it's a crypto, if it's a stock, if it's real estate, when things go up too high, they usually come back down. How far they come back down, well, that depends on many other factors. Okay. Look at this. My friends in Australia, you got to help me out here. You've got to help me out. Australian avocados, quote, due to a glut of fruit, avocados, which cost as much as $3.90 per avocado in 2016, are now selling for as little as $1, making them one of the few deflationary food items amid soaring prices for many other staples, most notably lettuce. I want to tell you, my friends in Australia, send me your avocados. Okay, $1 each. I don't know if those are the large size or the small ones, but those are probably the large ones. I'll take a few. Send them my way. Send them my way, please. Deflationary food. You don't see that too often. All right. And don't forget to hit that thumbs up, okay? When you do so, it really helps to support the channel. So let's look. Here we go. Auto dealerships are facing a shortage of technicians to fix the cars. One thing after another. I mean, what's going on? First, they didn't have the computer chips. Then they didn't have the glass, the windshields. Then they didn't have the tires. Now they don't have the people. I mean, what's happening here? Are things being erased from the earth? I mean, it's crazy. Isn't this odd? Like everything is in shortage. Everything. Everything, it seems. Or at least the perception is there. Near-term inflation expectations hit a record high according to New York Fed survey. This is, of course, talking about the consumer. What does the consumer believe will happen automatically becomes reality. And one of those things is home buyers. They're canceling deals at the highest rate since the start of 2020. Why? Because they don't know what's going to happen. Yeah, we got into it, but we're saying, you know what? I think housing is going to come down. Might come down another 5%, another 10%, another 20% or more. Who knows what the consumer is feeling? But I think I'm just going to wait it out. The problem with waiting it out is that interest rates are going higher. And one of the advantages that the United States has is that they can lock in an interest rate for a very long period of time. My friends in the US understand that that isn't something that all countries have. This is showing us credit card usage. Credit card usage had really peaked out a couple months ago and has now come down significantly, suggesting that the consumer is tapped out, could be, or that the consumer is simply saying, I'm tapping out. Okay, so we need to understand the nuances. Let's look at some of that. This is Bank of America. Card spending on durable goods and travel and restaurants, showing us actually that this has declined for both. So in the most recent data that we have, people just aren't spending the money. They're eating at home. And what else? Well, you may have heard of Klarna. Well, they're buy now, pay later. There's so many different ones, and they do mention others, Affirm being another one. Well, their valuation plunged 85% to $6.7 billion. Imagine, you're worth $45 billion today. Tomorrow, you're worth $6.7 billion. A huge drop, to say the least. Here we have gas spending. Gasoline spending is still up. So you want to know where the consumer is spending money. You want to know what's been holding up the GDP in some cases here. Look, it's up 20% in aggregate over the last 5 months. Huge. This is unbelievable. people are spending more on the thing that they ultimately need. If they live in an area where the only way they're getting to work is a car, they don't have much of a choice. Yeah, they can carpool and so on, but it's just the way it goes. Aggregated monthly card spending by major category. This is month over month, showing us each month of the year so far. And what's the only thing that looks to be positive, and that's not a good thing? Gas, 3.8%. Everything else, furniture, clothing, these other things, not really doing so well. And that shows us what the consumer believes. The consumer is starting to step away, and maybe that's because they're completely maxed out and they can't get any more debt, and the debt's becoming more expensive. So it's forcing them to simply tap out, or they're waiting and seeing. Look, restaurant spending by income group is showing us that this has declined significantly. This top left corner chart, significantly over the past few months. Airline spending going down, lodging spending going down, total card spending going down. The consumer is not spending what they used to before. And guess what? It's having a direct impact, partially having a direct impact on this. Retail inventories to sales ratio. So you look at the inventories going up, 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 because as we have discussed, you look at Target, you look at Walmart, they ordered way too much stuff. They bring all that stuff in, finally gets here on the boats. And by the way, billions and billions of dollars of merchandise still sitting on the boats, waiting to come in. So now suddenly there's a glut. And the consumer, yeah, they can get some deals, but the stuff isn't flying off the shelves. So what does that tell you? Okay. And then this right here, I think I'll end with this. While the growing expansion of casinos and state-sanctioned sports betting steal the spotlight, state lotteries have nearly doubled in size over the past 2 decades, driving multi-billion-dollar wealth transfer from the low-income U.S. communities to powerful multinational companies. Okay, according to the study, lottery retailers are disproportionately clustered in lower-income communities in nearly every state. And they get into this using cell phone location data, and so on. Okay. This is something that I think people should be aware of in what's happening here, because they're in a situation in which they need to get, they need to get out of their current circumstances. And that's what it really comes down to. People are destitute, and I believe that what's coming here is only going to make matters worse. So what can you do? Well, I've talked about this many times before, and the short answer for those who have not read my books is that I have playlists, okay? How to and solutions playlist. That's one. If you're brand new to all this stuff, I've got the e-course on there. It's just, a series of videos that I had done. It's on the playlist as well. Check out the e-course to be financially educated, to understand this more in depth. Okay, those are the 2 simple things. Try to get out of debt as best you can. If you have a skill, you're a handyman, you're a baker, you know social media, all of these things can be monetized in some way. Use that to the best of your ability. Instead of watching the Netflix, instead of having Disney Plus or whatever, get out there, work as hard as you can, and do your best. That's all we can do, okay? If you appreciate this message, hit that thumbs up button. When you do so, you're supporting the channel. And don't forget to subscribe. When you subscribe, you're going to be able to be notified of all these videos that I do each and every single day. So I'll see you on the next one. Take care.